Hello everyone, this is Debra Richardson, and today I am putting the AP in Happy where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team to reduce the potential for fraud, compliance fines, and just overall bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. Phase 1 of the Nacha Fraud Monitoring Rule for ACH initiators is here. Part of the rule requires that you have a risk-based approach, but what criteria can you use to determine risk for your vendors? In this episode, we'll talk about 3 approaches to classify your vendors based on risk. Keep listening. Welcome to episode 379, Nacha Fraud Monitoring Rule Compliance for Non-Consumer Originators, Determining High-Risk Vendors. Now, non-consumer originators, just so you know, that is you. So if your company generates an ACH pay file or a pay file that goes to the bank to pay your vendors' payments, your company has to comply with this Nacha rule. Now, I've been talking about, or had a couple of podcasts this month about this upcoming rule. And by the way, March 20th, that is the day for phase 1 to be required, or for those that are included in phase 1, where they have to comply with this Nacha rule. Now, before I get into that, I do want to just remind you that I did have 3 different podcasts where I talked about this upcoming Nacha rule, and actually another Nacha rule that is effective today as well. And so I did have 3. So episode 376 was March 2026 deadline. Nacha rules impacting vendor payments. And so I talked about it on that one. And then episode 377, Nacha's ACH Fraud Monitoring Rule, is the confirmation call. You're already doing compliance. So I talked about it, that one. And then with episode 378, it was 3 reasons why I don't recommend ACH pre-notifications to avoid payment fraud or for Nacha Fraud Monitoring compliance. So that one was just before this one. Actually, the last 3 episodes, 376, 377, 378, was on this Nacha rule. So all month I've been talking about it. Episode 376 is really the deep dive explanation for the 2 Nacha rules. So you can definitely, if you haven't listened to that one, go back and listen to that one. But coming back to this ACH fraud monitoring rule, phase 1 is for anyone that has that issues or generates 6 million or more ACH transactions in the year of 2023. And so keep in mind that your ACH transactions is not just your vendor payments, it's also your payroll. If you are a company that issues any other types of payments via ACH, like customer refunds, for example. All of that is included in the volume. And so if you don't know what your volume is, I would go back to your bank and ask them if what your volumes were in 2023. But I will say this NACHA has been coming out with rules that affect the vendor team. They've been doing that kind of regularly since 2022 when they came out with I think it was called the supplementing data or supplemental data requirements for vendors, where you had to make sure that wherever you had your vendor's banking stored, that it was encrypted at rest and in transit. And so that rule was back in 2022, and then they had some ones regarding the micro entries. So I will have a link to the page on the nacha.org site where you can sign up to be notified of these rules so you don't miss out on them. But any event, and you can check that in the show notes along with anything else I talk about here that I tell you is going to be linked. It'll be in the show notes. All right. So with that, and by the way, if you are not in phase one, then you will definitely be in phase two, because phase two is everyone else. And the date that NACHA has for phase two is June 19th. However, that is a federal holiday. So technically it is June 22nd. So even if you are not in phase one, you might as well get ready for phase two, because it helps you out too. What they are asking to do helps to prevent fraud, and doesn't everyone want to prevent fraud? All right, so the Nacha Fraud Monitoring or ACH Fraud Monitoring Rule requires that anyone that initiates ACH payments. And so this is your bank. It's the ODFI, or Originating Depository Financial Institution, and each non-consumer originator, which is you, and then also third-party service providers and third-party senders, again, with an annual ACH origination volume in 2023 of 6 million or greater. And I actually just did a free webinar, and I'll put a link to that one too, called Last Minute Compliance, 3 Ways to Meet NACHA's ACH Fraud Monitoring Rule Before the Deadline. So if you'd like to register to watch the recording, you can. But the question that I got there was, is that $6 million or 6 million entries? And based on the verbiage in the rule itself on the NACHA site, it says 6 million or origination volume of 6 million or greater. I take that to mean transactions, but my response should have been, I don't remember what I said. I think I said it was transactions, but if they want to read it differently, check with your leadership, check with your bank. But what I should have said is, does it matter? Whichever way makes you eligible, look at it as transactions, look at it as volume. And if either one of those makes your company eligible or required to comply as of phase one, then comply. Again, it helps your company too. It doesn't just help your company, right? Because you're avoiding fraud. It helps your company, it helps your vendor, and also helps the person that might have processed that transaction and that would have resulted in a fraud. Because what I've seen, maybe you have seen it too, is folks that are the victims of the fraud that actually process the transactions. When that fraud occurs, right, they either, retire early. I've seen that. I've seen people leave the company. I've seen people transfer to different departments. So you're really helping your company, your vendor, and the person that is processing that transaction. All right. So whether you are required to comply by March 20th or June 19th, NACHA requires that you establish and implement risk-based processes and procedures reasonably intended to identify ACH entries initiated due to fraud. Now, risk-based processes and procedures, I am going to really divide or separate that into two different areas. One is identifying vendors based on their risk, and those are the vendors that you have to make sure that you have some type of fraud or some type of process or procedure in place to detect fraud when you are dealing with vendors that have ACH payment methods. And so this podcast is talking about how you identify those risky vendors. Uh, but if you want to listen to or watch the Nacha compliance webinar I just talked about, the last minute compliance, 3 ways to meet Nacha's ACH fraud monitoring rule before the deadline, then again, check the show notes for a link to register and watch the recording of that webinar. So again, today we're going to talk about, well, how do you tell which which of your vendors are risky? What criteria can you use to determine high risk vendors? I have 3, and for each of the 3, I am looking at those things that can make that vendor low risk versus high risk. All right, so the 3 that I have identified that you can use to determine high risk vendors is the vendor request, the vendor payment, and then also the vendor country. So let's start with the vendor request. So low risk would be you met with the vendor in person, or maybe your internal team member, like the buyer or the team member that has a relationship with the vendor. They met with the vendor in person and they collected the documents that you need for vendor setup, including the banking information from that vendor in person, versus high risk, where the request came via email. So we all know that email is very risky. So the request came from email. That request included the vendor documents that you need for vendor setup, including banking information. So low risk versus high risk. Now, all right, so let's look at some other areas or parts of the vendor request. So maybe, right, the vendor had a change of banking, or maybe they're just adding banking and you did the confirmation call. Well, if the confirmation call was valid, and keep in mind, there are some things that you need to be doing with that confirmation call to make sure they are valid, to make sure your folks, right, because you don't really know what they're doing when they're making that call, to make sure that they didn't contact use the contact information from the email in order to confirm, because the fraudsters are going to definitely confirm. But you need to make sure you have processes in place. So even if they do that, it's still a valid confirmation call. And so I'm going to put a link to the vendor callback confirmation toolkit. I always name things so long, I can't remember what they're named, but it is a toolkit that includes a desktop procedure, confirmation call scripts. So your team, so you know your team, right, are saying the right things, are really completing a valid confirmation call. I'm going to put a link to that in the show notes. It is everything you need to comply with this fraud monitoring rule from NACHA. So anyway, low risk would be a valid confirmation call. High risk would be an unsuccessful confirmation call. Uh, 2 other things too that can make it low risk, and these are types of things you need to have on your vendor banking form. Don't just accept whatever they give you. Have your own vendor banking form. If you've been listening to my podcast for, a few episodes, you know this because I say it all the time. Have your own and put the things that would identify, right, a fraudster, or things that would deter a fraudster. Things that would create a red flag. And one of the red flags that you can look at and definitely include it on your uh, vendor banking form is include the country. So ask on your form, have two fields, one a country for the your payee, right, their information, and then have a country for the vendor bank. Right, either the new bank, also have it for the existing bank. And again, existing banks for requiring existing banking for vendors that are changing their banking is one piece of authenticating data. But anyway, have the country field in each of the banking sections and in the payee section. And if the bank country is different than the payee country, that could be a red flag for fraud. So you can put that together with other red flags that you may see with the request and determine that it is a fraudulent request. So low risk would be the same bank country, high risk would be a different bank country. And then the last one that I have, you may not think that it is a red flag, and it may or it may not be, but it is something that you do need to check into. And that is whether or not the bank account name is the same name as the vendor. And yes, I know that many subsidiaries will use their parent's name as their bank account name. But if you think about it in the context of romance scams, you are not going to have the same bank account name. So yes, it is worth reviewing and identifying it as a red flag that could be a high risk vendor. All right, so those are the things with the vendor request. Maybe you can think of more if you have different ways of receiving information from your vendor for ads or changes. And the second one is vendor payment. So, I have three things here that can be determined as low risk versus high risk. And the first one is, that the vendor that you are paying, is that a consistently paid vendor? Is that a vendor that you have paid before versus a one time payment or a new vendor with unconfirmed bank details? So, a consistently paid vendor where you've paid the vendor multiple times, you haven't heard back from the vendor that the payments, that they haven't received the payments, be considered a low risk vendor. However, if you have a vendor that is new, this is the first time you're going to be paying it, the vendor does not have confirmed banking details, maybe it is a one time payment vendor, and that would be considered a high risk vendor. The next one is look at the average payment amount. And so if the payment amount is average of what that vendor normally receives, then that could be considered low risk. Or maybe it's not just based on the vendor, maybe it's based on all your vendors. Maybe you have an average payment amount threshold that you can say anything below that amount is not high risk, versus a payment amount that would be considered high risk. So if you have a vendor that has a $20 payment, you know what? That vendor can be considered a low risk vendor versus a vendor that you use for construction projects where the payments can be, in the millions of dollars. That is definitely considered a high risk vendors. Now, if you have vendors where the average payment amount, right, is uh, can fluctuate. Maybe for that construction vendor, you've got, let's say, both $20 payments and $1 million payments. You might just want to classify that vendor as high risk because if they only have $1 million payment, uh, and and $20 payments, it's going to reduce their average, right, to, $500,000. And so maybe you want to look at individual payments as well for those vendors to determine if they've had any payments over whatever your threshold is. All right, so average payment amount, if it's low risk. If it's higher, then it is high risk. And you can determine what those thresholds are. And then the last one that I have is if, let's say, you're making a payment to the vendor and the payment or the vendor has not had a remittance change for that payment, then that is considered low risk or could be considered low risk. But if you are making that payment to the vendor and the vendor just had a remittance change, right? And that's the first payment since the remittance change, that would be considered high risk. All right, and the last one that I have is vendor country. Now, it's not necessarily because there's anything wrong with doing business with international or non US or foreign vendors, because fraud can happen anywhere. We're seeing now plenty of instances and examples of fraud where these folks are US based. And so it's not because they are out of the country or not in the US that they are riskier. It's because of some of the logistical issues that it poses with US companies doing business with vendors in different countries. And so I have four different things that you can look at. So the first thing is the bank country. So is the bank country in the US? Or is it a non US bank country? Now, the issue here is that the Nacha ACH network is uh, for US financial institutions, although you can send an international ACH transaction, the problem is that it's not as controlled by the ACH network. It goes out of that or out of that network in order to deliver that payment. And so there is some risk involved with that. So a US bank country is lower risk than a non-US bank country. Now, the second thing is the language barrier. And why is the language barrier an issue? Because if you're in the US and you're trying to do, for example, that confirmation call, then having that confirmation call with a vendor's point of contact that does not speak English well or understand English well is going to be an issue, especially if you are performing the confirmation call using scripts that are included in the vendor confirmation callback toolkit. That's going to be a problem because I have in those scripts where you have to ask authenticating data and they have to tell you that data, what that data is successfully in order to have a successful confirmation call. And so if they do not understand English well enough to do that, or if you don't understand or speak their language, their local language, right, and be able to have that successful confirmation call, then it's going to be a problem. And along those same lines with language barrier, could also be a time zone barrier, right? So anyone or any vendor that is international that has a time zone, that means when they are working, your company is not, or your teams are not. And so you're not able to make that confirmation call, or it's just a very short window of when both your team and the vendor's team is able to make that confirmation call. And so there's a time zone barrier. You know what? And I didn't put it here. I'm talking about the confirmation call sometimes, and We didn't have this issue when I was a practitioner. However, I have heard from some teams where it is an issue with even making a phone call internationally. And so what they resorted to doing was they resorted to, Zoom calls because, no matter where you are, you can jump on a Zoom call. And it doesn't have to be a Zoom call. That just happened to be the example. It could be any video or conferencing platform. So language barrier, time zone barrier, and then of course the valid confirmation call that can be affected, right, by both a language barrier and time zone barrier. And so if you have a valid confirmation call, hopefully you don't have any language barriers or time zone barriers, then that is lower risk than if you have an unsuccessful confirmation call. And again, due to time zone barriers or language barriers, or, maybe you don't have either of those and the confirmation call was just not valid. Maybe you weren't able to reach the vendor. That can happen whether it's US or non US. Maybe when you did reach the vendor and there were no language barriers, the vendor was not able to authenticate. And so the confirmation call was not valid. All right, so those are three areas or three ways that you can apply a risk-based approach. And so I'll go over them again. One was the vendor request. So, how did you get that request in? The next one was vendor payment. Is it a high payment? Is it a low payment? And then the next one is vendor country. Is it a U.S. bank versus non-U.S. banks? Are there, barriers because the vendor is in a different time zone or does not speak English or your team members do not speak their local language? All right, so I hope this gave you some ideas of what you can use for your risk based approach. And then once you do identify your high risk vendors, then you can apply whatever fraud monitoring processes and procedures you have identified will work for your company, whether that is that confirmation call. But keep in mind, you're going to have to do some additional steps with that confirmation call because sometimes folks are only or teams are only doing it for vendors that have had changed banking details. But keep in mind the Nacha Fraud Monitoring Rule doesn't just say for change vendor banking. It says for, any ACHs that are initiated, which could be, right, an unconfirmed banking for a vendor that is new. And so if you want to just make sure that you understand those types of things and again, get three ways that you can meet it. Make sure that you check for the link in the show notes to the free NACHA compliance webinar. Again, last minute compliance, 3 ways to meet NACHA's ACH fraud monitoring rule before the deadline. And then if you do know that you're going to use the confirmation call, make sure you step it up and make it better with the vendor callback confirmation toolkit, where you'll get everything that you need to comply with this NACHA rule, including a desktop procedure that has all the best practices included, along with your scripts that your team can use, confirmation log, and an implementation guide. All right, so I hope you found this useful, whether you are or your company is required to comply as of today, March 20th, if you're listening to this podcast when it was originally published, or if you are in phase 2 and you are required to comply by June 19th. So, thanks everyone. I hope you enjoyed the 379th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.